February 10th, 2026. Let's go over the trades I took today. Today was a special day. We're going to get into why. I took many trades today. Let's actually say the number. I took 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. I took 10 trades today. And we're going to go over them as quickly as possible because I know your time is valuable. And we don't want to drag things out. We want to get straight to the important information. No fluff. On a daily MACD, which shows us our momentum for the NASDAQ. We had a tipping point 2 market days ago. 1 market day ago, which was Monday, we had a continuation. We had a confirmation that yes, in fact, the momentum is holding the reversal back to the upside. And then today, we had a continuation on top of that. Now, the volume is not building, it's shrinking. So we're not getting too confident that this is just going to shoot up, but the momentum before the market opens today, the momentum is to the upside. Let's get into it. Let's see what happened. First trade of the day was in NASDAQ. And I took the trade because our settings showed up. Our signal arrived. What do I mean by that? First of all, our 5-minute twins, we're not using the 1-minute or the 2-minute right now. Right now we're using a 5-minute. Our 5-minute twins are aligned to the upside at this time. At this time, our 30-minute is pulling up, so we've got upward momentum on the 30. And then we had a little bit of downward momentum on the 2-hour at that time when the trade was happening. 2-hour was actually headed downward, a foreshadow for what was to come. But everything else was going up, so we had permission to take trades to the upside. Why? Because we had a volume confluence, a volume bar greater than the previous 2. Almost greater, it was greater than the previous 3. But more so, importantly, this was a 2x3. Which is a volume confluence where the final volume bar is greater than the first one. You've got 3 volume bars, final greater than the first, and 2 out of 3 of them are aligned with the direction of the trade. Green for longs, red for shorts. So this was our setup right here. We enter at the top, close the candle. We wait for the candle to close normally unless we break a level or unless something else is happening with like price action. We enter at the close of the candle. We put our stop loss slightly below that candle, and then we target a 2-to-1 normally. This next candle immediately hit the stop loss. Got me out for a loss on that first trade. Now, notice this pink and red dashed line right here. What does that represent? Well, the bold red is the pre-market high, and the faded red is yesterday's high. If the pre-market high and the previous day's high are this close to each other, that's a double critical level. And double critical levels are very important to pay attention to. And look what happened with our price action. Price action goes up, hits this critical level, rejects, comes back up. It's wedging, it's consolidating, it's fighting against this critical level. Is it any surprise what happened next? The sell-off. Is this sell-off a surprise? If we have consolidation and a denial of a critical level of the previous highs? These things start to make sense when you see them often enough. This is why experience in the market is so important. This was a loss, and this affected my mentality and caused me to miss out on this trade right here. This orange line, this short opportunity. We're going to talk about that. But first, we got to go to my second trade of the day. Second trade of the day. I'm going to tighten all of this up so we can save some screen space. Second trade of the day was in Palantir. So I took this trade. I took a loss. Went to Palantir. Palantir, I saw we were building momentum to this is the 5-minute regular hours, 5-minute extended. The 5-minute twins We're aligning to the downside. This one's already in the deep red. Now it's ticking down for the first time with a volume confluence involved. A 2x3 volume confluence right here. 2x3. 2 reds. Last one is greater than the first one. And the 30-minute is strong in the downside. A lot of downward momentum from our 30-minute momentum. Our 2-hour momentum is also strong to the downside. So we've got a lot of forces, momentum, pointing to the downside. I see this volume confluence. I enter the trade. This trade was ruined by my impatience. Enter at the close of the candle, right here. Stop loss slightly above that candle. Again, we enter because that's where the volume confluence aligns with the MACD. We only trade with the MACD. We never trade against the MACD. So here, so notice how this is going up. We're not going to take short trades while this is going up. We're going to wait for the momentum to shift. Then we start taking short trades. Okay, how did I mess this up? I entered this trade. I took profit at the correct level, where you sell 80 to 90% of your position and you allow the remaining 10 or 20% of your position to continue running so that you can capture more and more profits. What did I do? What did I do here? I moved my stop loss from the original. It should have been on this red line. That's where the stop loss should have been. I moved it down because of my own fear of loss, and it stopped me out. If I hadn't have done that, if I would have left my stop loss where it was supposed to be, I want you to see how much money I would have made. Look at this. So, these are the kinds of mistakes. Though this trade was a win, and though I operated it correctly, I did mess up with moving and managing my stop loss level. I should have waited for the price action to unfold and make more progress before moving the stop. And I would have had so much more profit. So that's the lesson there. Next trade on the day was Intel. I traded Intel 3 times today, all signified by these yellow lines. And I did the same freaking thing right here. I took a trade because why? Why do I take? We have a tick down. Not here. We're not going short yet. These are going up. Boom. We have a tick down. We have a volume confluence. Our 5-minute twin is aligned, showing the same data. Our 30-minute strong to the downside, unbroken. Our 2-hour is screaming to the downside. This was a no-brainer. Take the trade every time. Entry at the close of the candle. Stop loss slightly above. Do you notice how the price action didn't hit my stop loss? Got close, didn't hit. So I got out again. I got out here at the entry point because my mind was tilted from losing. And my mind was tilted from getting stopped out of Palantir, so my mental game was off here. So I exited the trade, and that's a horrible mistake. I exited the trade at a slight win. I took micro profits, exited the trade. Horrible. Horrible, horrible, horrible. It never hit my stop loss. It kept going. This would have been a huge win, but I ran away. Next trade. I want redemption. I messed up. I wanted redemption. So I entered here on this candle. Why did I enter on this candle? Because we have a volume confluence. Our MACD is now flipping to the downside. We have our 30-minute and our 2-hour giving us permission. Hey, take shorts. You want to be looking for short opportunities. This was another trade. This time I actually stuck around and I waited and I remained patient and ended up winning. And I added to the position right here on this next setup. Why did I add to the position? We have a volume confluence. We're on the right side of the MACD. It's the same setup all the time, every time. And this continued to unfold, and it was a great trade. But man. And this what do you know right here, me putting what do you know, what does that mean? Well, what do you know? Look at how the price rejected off this level, came back, rejected off this level again, came back, now it's puncturing through. That would be a wonderful entry, by the way, for your studies. Why? look what's happening. We're puncturing through, we're penetrating, we get a volume confluence, we're on the right side of the momentum. Perfect trade right there. What do you know? What is this level? This level, faded blue, not bold blue, faded blue means that was the previous day's low. Next trade of the day was on Amazon. Amazon was right here. I took this trade because our 30-minute had crossed over, giving us permission to take trades to the downside. 2-hour MACD momentum going to the downside. What do you see here? You see a volume confluence. You see the histogram consolidating, stalling. Now it's starting to show the first signs of slipping, the pressure being released. That's the entry. Entry at the close of the candle, stop loss slightly above. First profit target was hit around here. The remainder of that position was allowed to run and capture huge profits. Next trade on the day, NASDAQ. NASDAQ was traded right here. Why? What do you see? We're on the right side of the momentum for short trades. Why are we taking short trades? What's going on? Well, remember, this double critical level that we just got denied off of earlier? Yeah, so we're obviously, the probability of penetrating through this level and going up is now very low because we saw what happened to the price. We saw what happened to the market. So now we're getting a signal, hey, here's a volume confluence. We're on the right side of the momentum. Our 30-minute is strong in the downside. 2 hours strong in the downside. That is a no-brainer, ladies and gentlemen. You enter at the close of the candle, stop loss slightly above. Take profit at 2 to 1. Allow the remainder of your position to keep running to get more and more money. That was a good win. Great win right there. Next trade on the day was in Palantir. Palantir happened right here. Later on in the day, after that massive move that I was able to capture, that I was not able to capture because I got stopped out. After that massive move that I failed to capture, which threw my mental game off, what do you see right here? We have a volume confluence. We're on the right side of the momentum. Our higher time frames are telling us to look for short opportunities. We enter right here on this candle, close the candle, stop loss slightly above, take a profit at a 2 to 1 ratio, allow the remainder of your position to keep on running to get more and more profits when the market gives it to you. Next trade, 2 more trades to go. Next trade was in NASDAQ. Why did I take this trade? What do you see? What do you see? This is off. This should be the next candle right here. That's where the trade entry was. What do you see? You see a volume confluence. The MACD is now going to the downside. It's the same thing every time. Every single time. Look at our higher time frames. 30-minute is telling us to take longs, right? No, it's telling you to take shorts. Look at the momentum that's building in the selling direction. 2 hour telling you the same stuff. You enter at the close of the candle, take profit at that 2 to 1, stop loss slightly above. Another win. Last trade of the day was Amazon. Now I entered this trade at the end of the day, so I didn't get to let the trade play out to hit my profit target. I had to take smaller profits because I had to exit the trade before the market closed. I do not hold positions after the market has closed. I exit my positions before the market closes. That's what I do. Entry was here on this yellow line. Why? Why did I enter here? What do you see? A volume confluence right here. Volume bar greater than the previous 3. Power volume bar, otherwise known. Our 30-minute is telling us, hey, we're taking shorts right now. Ignore this one. That's not where we are. We're right here at this point. Entry right here. Stop loss slightly above. I got to take profits at this yellow line. I didn't get to take full profit because we ran out of time. The market was closing. That's all of the trades for today. And before I end this episode, I just want to verbally articulate what I learned today and what happened to me. I told you today was a special day. And it was special because the rite of passage in trading is an exercise where you go somewhere between 50 and 30 trades. Somewhere between that number, 15 and 30. Where you go, for me it's 16, 1-6. You go 16 trades where you're not allowed to exit early. You're not allowed to take profit, or you're not allowed to do anything. You have to follow the plan, and you can't interfere with the plan. You have to let it unfold. And I've already passed the rite of passage once with my primary strategy, which uses the 1-minute chart. But I'm going through the rite of passage again with this 5-minute strategy. And I failed today. I failed. It was the one trade I talked about where I took micro profits when I was trading Intel, my third trade of the day today in this video. I took my micro profits because of fear and because of hesitation and because of my emotions. And that whenever you mess up and you fail, you don't follow your rules, you don't follow your plan, that resets the rite of passage. You now have to go right back to number 1, and you've got to do another 16 in a row where you don't interfere and you operate the strategy without interfering with the rules. I want to tell you what happened to me. I failed. That third trade I took, remember, I took 10 trades today. On trade number 3, I failed the rite of passage for this 5-minute strategy. What happened after that is nothing more than transformative. Something happened within me, something clicked inside of me, and I just started to be able to operate without emotion. I don't know what happened. I don't know what happened to me. But after that moment, the next 7 trades that I took today, I operated all of them flawlessly. They were all wins. Not that winning matters, but I operated them all flawlessly, and I automated all of them with OCO orders. One cancels the other order. So I automated the trade. I saw the setup, I saw the signal, I took the trade, and I didn't think about it any further, and I just went about my life. And that was the best trading I've ever done. That was the best trading I have ever done. So that's what happened today, February 10th. I'll see you in the next one.